Hi guys and welcome back to my channel Pips and Profit, and in this video series we are teaching everyone how to become a professional forex trader starting from the beginner phase. So we titled this series Forex Trading for Every Beginner, and in this video we're going to be talking about what is liquidity. So many times as a forex trader you must have heard the term liquidity. Even as a beginner you would have heard the term liquidity. Now in forex, liquidity has its own definition. So we're going to jump straight into the definition of liquidity. Now in Forex, we determine liquidity, or we define liquidity as areas in price that attracts the interest of the institutions. Areas in the chart or areas in price that attracts the interest of institutions. Those areas could be your stop losses, where you can potentially put your stop losses, or where you can potentially put your take profit as a retail trader. All right, because these institutions, they are interested in grabbing your stop losses because that is how they make money. Remember, the whole game on forex is zero sum. All right, the whole trading system is a zero sum game where wherever you're losing, someone else is on the other end making the money you're losing. All right, and whenever you're winning, you are making the money that someone else has lost. All right, so there is no money going into any other place except an exchange from a winner to a loser. And definitely, but with this series, you're going to be on the winning side. Okay, so whenever someone's stop loss has been grabbed, liquidity has been taken. That is what we say in forex. All right, potential grab of stop losses, areas where your stop loss are potentially going to be, or your take profits are going to be. All right, so it is what drives the market. Liquidity drives the market. It's like the main driver of the market. So the market is always moving from one liquidity point to another. Some people say that there are internal liquidities and external liquidity. We're going to talk about that in a whole new series, okay? But in this series, we just want to educate you on the basics that you need to know to get started. All right. So talking about liquidities, there are different types of liquidity, and I'll be willing to show you that. This is what so many people pay a lot of money for. I'm going to show you that for free. And trust me, this is not a stolen material, or this is not a material gotten from any other place. It is based off experience. And definitely, I was also taught by a few other people who were willing to share their educational materials and ideas with myself. So I don't have a monopoly of all the knowledge. All right. So shout out to all those who has contributed in impacting my life with such meaningful education. Now back to the chart. So we said liquidity is what drives the market. So if we have an uptrend, market is moving this way, just going upwards like this. We say it is liquidity that drives the market. That means the market is in search of liquidity while making its way upward. The moment price has grabbed all the liquidity it needs to grab to the upside, it changes. This is beyond, this is independent of fundamentals. All right, when we talk about fundamentals, there's a whole video talking about fundamentals. So you should check that out on the playlist. All right. So beyond fundamentals, when price is moving in line with fundamentals, it's moving in search of liquidity. Now, when we use the dollar sign on the chart, what it simply means is it denotes liquidity. So whenever you see a dollar chart on a forex chart, a dollar sign on a forex chart, know that we are using it to denote liquidity. All right. Now look at this. When price was moving to the upside from let's call this point A, let's call this point A now, or let's call it point one. All right. So let's call this point one. I like to be practical. I don't like to use in this kind of materials, we need to be very practical in it. So when price was moving from point one to point two, all right, then from point two, price moved to point three. We said liquidity is a driver of the market. So while it is moving to point two, there is definitely going to be something that it's looking for from point two to point three, because what is now driving price to this downside? It is a retracement. Yeah, we talked about that in the previous video. So this is a retracement, right? What is driving price to this retracement? It's a liquidity point that is bringing price down here. And when it moves from point three to point four, What is driving price to point 4? It's definitely a liquidity point. So we're going to be explaining all those. All right. Then from point 4 to point 5, still a liquidity driving price there. Same thing goes from point 5 to point 6. Still a liquidity point driving price there. So we have three basic types of liquidity that I'm going to teach you. In this video, we're going to cover one, and in the next two videos, we're going to cover the other two. All right. So in this video, we're going to talk about the first type of liquidities, which is highs and lows. Highs and lows. So I'm going to give two examples in one. So we have this, we have this, and we have this. Okay, so we have to extend our points from point 6, point 7, all the way to point 8, and then point 9. All right, just stay with me. We have point 9 right here, point 10, and point 11. All right, so we're quickly going to change that. Point 11, point 10, and point 9. I like it that you're doing this with me. All right, so this is point 9. So price has been moving all the way to this point. Now, definitely it is liquidity that is driving this market. And where are the liquidities? The first type of liquidity is called the highs and the lows. You already know where your highs are and where your lows are in this chart. Okay, if you don't, go back and watch the previous videos where we talked about our market structure. All right, so this is a high, point 2 is a high, point 3 is a low, point 4 is a high, point 5 is a low, and same thing goes. Now, if market is in search of liquidity on its way up, you can see that at the moment point 2 was created, a high was created. All right about here, a high was created on point 2. As market got to point 3 after the brief retracement, it expanded to the upside and grabbed the liquidity at point 2. It grabbed the liquidity at point 2 because it went beyond. All right. So if you are selling in point 2, your stop loss is definitely going to be somewhere above this high right here. And as price moved all the way above, it violated that point and traded above it. Okay. So price has grabbed that liquidity. That is the high there. Same thing goes for point 4. When price came to point 5, it went back and grabbed the liquidity on point 4. That is when price traded clearly above point 4. So we'll say at that point, liquidity has been grabbed. All right. Same thing goes for point 6. Okay. So when price got to point 6, it went and traded above the liquidity of point 6. All right. So when price is trading above previous highs, we say it is grabbing liquidity. Okay. And similarly, when price is trading below previous lows, just like we have the low of point 0.9 and price traded below it, at this point, we say price has grabbed liquidity residing at point 0.9. All right. So all these previous highs and previous lows, they are our liquidity point. So how do we take advantage of this? When we are at point 3, knowing that this is an uptrend, we'll be buying from point 3 to point 4, targeting this liquidity point. So you can just put your take profit right on point 2 and expect price to grab it. Similarly, when price does all this from point 7 to point 8, you set your liquidity point and expect price to go beyond it. All right. And then when you've confirmed that this is a reversal, all right, and price is going to trade all the way downwards, you set your sell at point 10 and you expect the price is going to go beyond point 9 to grab liquidity. Okay, so that is basically the first type of liquidity. In the next video, we're going to be discussing the other types of liquidity. Until then, I wish you good luck and good trading. If you're new to this channel, make sure you subscribe and like this video. Okay, and we keep seeing videos like this. Until we meet again, cheers and God bless, guys.